Well, markets had another rough day, and the reason is pretty clear. The Middle East conflict is escalating and oil prices are surging again. Hey everyone, it's Friday morning, March 13th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks moved sharply lower yesterday as investors reacted to rising geopolitical tensions and the growing risk of disruptions to global energy supplies. The Dow Jones Industrial Average dropped about 1.5%, which translates to more than 700 points, marking a third mostly negative session in a row. The Nasdaq Composite fell roughly 1.7%, while the Standard & Poor's 500 also declined by about 1.5%. Now, the big story behind the sell-off is oil. Brent crude prices surged past $100 per barrel after Iran expanded attacks on energy infrastructure across parts of the Middle East. Adding to the tension, Iraq shut down its oil port terminals after 2 tankers were struck off its coast. Iran also warned markets that crude prices could potentially reach $200 per barrel, and the country's new supreme leader suggested that the Strait of Hormuz should remain closed, a move that could severely disrupt global oil flows. All of this raised fears that the conflict could become longer and much broader. Experts say that if energy supply routes are threatened, volatility in financial markets could remain elevated. On the economic side, the data picture was a bit calmer. Initial jobless claims in the United States came in at 213,000 for the week ending March 7th, which was actually below what economists had expected. And after the latest inflation reading earlier this week came in roughly in line with forecasts, markets now expect the Federal Reserve to hold interest rates steady at its meeting next week. Investors are also waiting for another key inflation measure, the Personal Consumption Expenditures Index, which will be released today and could provide further clues about the path for monetary policy. So overall, yesterday's market story was really dominated by geopolitics and energy prices. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.